Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this on late Friday morning, May 10th. So it's been another constructive week for the market. That makes 3 in a row. So much so that the major indexes are starting to live above their 50-day moving averages, at least as I record this, which is a good thing. By the letter of the law, the intermediate term trend has kind of rejoined the longer term trend on the positive side. It's kind of neutral, but it's, more positive than not. And the broad market's done very well. Whether you're looking at new lows, we actually had kind of a shorter term breadth thrust, so to speak, earlier this week. That usually leads to good things. We'll see, but clearly the tenor of the market has improved, and that's what I focus on most. Now, with that said, there hasn't been a lot of power. It's been kind of low volume. There's been a lot of action with like the Dow Industrials and utilities and consumer staples and financials, and that's fine. Growth stocks, on the other hand, I wouldn't say they're, way lagging, but they're not. There just hasn't been much power. Earnings season has been very tricky. So it's a little bit of depends what you're looking at this stage in the game. Overall, though, backing up, we always thought that, hey, it's a bull market. We're having our first correction. And we did. We had 6% on the S&P, 8% on the Nasdaq, about 10%, sometimes more on some of these growth measures. I'd say 8 to 12, depending on what you're looking at on the growth side of things. So that could be enough, and we just kind of kite higher from here. I don't, though, see the power that we saw, say, in November, where you couldn't keep up with all the stocks, right, that were breaking out. Oh, geez, this is a little bit more selective and, like I said, more defensive and mega cap and cyclical. So we'll see how it goes. In Cabot Growth Investors model portfolio, we had about 44% in cash. We're down to, say, 36, 35%. That could go down to 20 or 15 if we do see some of these growth areas, and not just, the chip stocks or whatever, but some newer growth names really emerge and really show power. We could do some buying pretty quickly. But at this point, for every one stock that's showing power, there's 2 that are kind of selling on strength or getting hit or just kind of running into resistance. So it's not bad. It's just sort of not, something where I'm just eager to just put all my money to work right now. So we're, at least on the growth side of things, taking things slow for now. And we'll see how it goes and see if things can kick into gear going forward. Okay, enough of me rambling here. Let's go into the charts as usual using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. And just start with the Nasdaq. And so overall, we call it our Cabotage, but the intermediate term model it's not quite a whipsaw buy because the 50-day flattened out. But either way, it's come down and it's kind of come straight back up, which, sometimes that's good, sometimes it's not. But in terms of, leading forward, have we shaken out enough people and all that? But you can always play those games. What I like to see is that we've gotten above the 50-day line, and so far it's been 1, 2, 3, 4, 5, 6, as I record this on Friday, 6 days where it's holding above that. That's a good thing, okay? Same thing with the other indexes. Not really out to new highs, but back above the 50-day line and living above it, not just above it for an hour or a day, but now it's maybe 6 days here, okay? And it's pretty broad. Like I said, the broad market's improved. Now, IWM is still bringing up the rear, but even this has been living above the 50-day line. This is MDY, the mid-cap, same sort of thing. And even the New York Composite, which has more commodities and financials and stuff like that, the 50-day line's actually advancing. So that is kind of a whipsaw buy signal. So back to positive. If the longer-term trend was kind of neutral or negative, then, you'd kind of look at this action and say, well, we're back into resistance and all that. But given that the longer-term trend is positive, that the broad market is healthy, the number of new lows has really dried up nicely for almost 2 weeks, really for 2 weeks now. It's a pretty good sign. So that's all to the good. Now, there is, when you're looking at growth stuff, it's not quite the same picture, which of course this is what I focus on. So, but this is the QQQE, which is the unweighted Nasdaq 100. So obviously it's got the same stocks, chips and healthcare and networking and software, but just unweighted from the mega cap things. And you can just see this is kind of right into the 50-day line and still kind of a lot of these things, even the major indexes that are, testing their highs, but they're just kind of right into some resistance areas. The IPO fund, which it's not the be all end all, but again, kind of hit the 50-day line and backed off. The momentum fund, which is MTUM, which I do like. So it's just, it's small, but to me, it sort of backs up what I'm seeing among individual stocks, which is like, it's improved. I mean, this is good. It's technically above the 50-day line, but it's not, running away on the upside. And you're still seeing a decent amount of selling on strength and stuff like that. Chip stock, same sort of thing. This is the SMH, popped higher this morning, reversing a little bit. But, so above the 50-day line, like overall, when I look at this, what I see is this is good. The fact that we've come back is good. If we did this after that decline, that would be bad, So up is good. But the question is, do you pile in here? Do you go out and buy 5 stocks? Is it some major buy signal? I hope so, but right now I can't conclude that. I would just say we're kind of into resistance here. So overall, big picture, more positive. The fact that we're going up is a positive. But in terms of like honing in on, what the next 4 weeks look like, what stocks to buy, gets a little trickier, okay? Moreover, just earnings season it's not a disaster, but there's been a decent amount of blowups. Now, I'm not saying Cloudflare was some major leader, but this was kind of a turnaround play. This is NET. One of the former leaders, one of the few that, it got killed, obviously, bottomed out forever. And we had mentioned it on this video, mentioned it in the letters. And then a big earnings gap. This was near the market peak, or this might have been, this was February. So it kind of came in here, and it had kind of broken down with the market, but then got hit again. Datadog was a name that we were watching, that looked pretty good in here, and then just kind of gapped down on earnings. Okay, we've seen selling on strength where, again, this is more of an older, quote unquote, older name, but this is HubSpot, gaps up on earnings. We've seen a lot of this where even the things that look pretty good, they gap up, but they might close, they might gap up 10 and they closed up 4. So, you'll take it, but there's definitely was some selling in there. And then yesterday was Robinhood, which was a name on my watch list. And, it gapped up nicely at the open, and it's pretty much been all selling ever since. Okay. So now I'm not saying in this case, Robinhood goes, it's destined to get to crash or anything like that. But, I'm not getting the sense that institutions are just dying to get into these stocks. Some of them look good, but especially the liquid names, when they run kind of gap up or they're into some resistance, you've seen some backing off, and we'll see how that plays out. But that's just what I'm seeing today. Maybe come this afternoon or Monday or Tuesday, it's completely different and it's a buying panic, and I'm all for it. But I'm just telling you what I'm seeing right now, okay? The other thing that I mentioned here is just we are seeing, I mentioned all the way during the up move that yes, XLP, this is the Consumer Staples Fund, is going up. But, the Nasdaq's going up faster, and you can just see relative to the market, this is what this blue line is. It's been underperforming the S&P for this whole time. Now it's starting to pick up, and I wouldn't say it's drastically outperforming, but if you do look at it compared to the Nasdaq, it has been outperforming things. Then you look at stuff with the utilities. I know some of this is like there's an AI play with the utilities because of the power generation, but at the end of the day, you're looking at huge utility firms like, a NextEra Energy, and a Duke Energy, which is, not the most dynamic, but they're kind of racing higher while, other things are kind of banging into resistance. So we'll see how it plays out. Again, it's not like some definitive, it's a secondary indicator. This is all, it's not price volume and stuff like that. But, I do keep an eye on that. So we are seeing some of the defensive stuff perk up. The Dow Industrials have had a few, days here where they're really outperforming the market, racing back toward their highs. So we'll see how that plays out. The good news before I get into individual stocks, next week does have a CPI report. So we're kind of in this news-driven thing where it's, the jobs report, it's unemployment claims, it's the inflation report or whatever, and some Fed speech. Of course, they're out there all the time. So it's a little bit news-driven, but we have seen interest rates back off nicely here. And I would just say, and kind of into the 50-day line, this is the 10-year note, but you could look at pretty much all of them. So it's kind of into the 50-day line here. I would just say if we can really extend lower, pretty good, probably a pretty good sign, interest rates going down. But if rates were to bounce, they would probably find some support around here. So we'll see how it plays out. But so far, this has been one of the factors that's kind of helped the market levitate here more recently, okay? In terms of individual stocks, so let's just dive into those. It's really kind of a smorgasbord. There is some growth, but it's all, by doing top 10 trader and screening for that, just see a lot of it. So this is like United Airlines. Some of the airlines look good. I know it's not the most exciting thing, but a huge, I mean, look at the volume clue here. This is the biggest going back, I think, for at least a couple of years, and just been trading tightly ever since UAL. Maybe we get some oil prices sink or whatever, but certainly looks good. And there's some other peers that have been kicking into gear too. So I know airlines, aren't the most sexy area, but it does look like a pretty good setup there. Again, just kind of going randomly here. Pinterest, it's one of these names. It broke out here and had a good run. This was back in November when the market got going. Into February, which was kind of the growth stock, not the growth stock top, but when a lot of things started to stall out. It did have a pretty good size correction, but now it's kind of blasted off again on earnings. I wouldn't say it's into resistance. It's definitely shown good power, but you can decide what to do with it. But maybe it pulls in here, maybe it consolidates for a bit, but Pinterest certainly looks good. Nvidia, I'm bringing this up just because, this is kind of what we're seeing a lot. It looks pretty good. It's had a nice comeback here. And if you look at the weekly chart, obviously it's had a huge run, but it's, 1, 2, 3, 4, 5, 6. So this is 7 weeks now since it started to correct, really. Okay. If we look at the daily chart, if it wants to, yeah. So it's basically been kind of 7 weeks since here. So we are seeing, so now it's kind of had this thing, not really a lot of volume on the rally. Okay, no big deal. Now it's sort of, I don't want to say tight because the thing, if you watch it, it's moving around 20 points a day or whatever, but really it is pretty tight percentage-wise. And you're just seeing some of the stocks start to do that on the growth side. So can we get a breakout? Does it fail? That sort of thing. But Nvidia, even if you don't buy it or you don't own it, it's definitely a name I'd be watching as kind of the flag bearer for growth stocks, okay? But we have seen some chip stocks begin to show this pattern. So this is Broadcom, AVGO. I know it's a $1,300 stock, but it's kind of like the gentleman's way of playing sort of AI chips in that sense, some of these accelerators and whatnot. And you're going to see it's at a very normal, basically it's gone between 120 and 140, think of it that way. And, it just needs to show some power. Right now it's just still kind of going sideways. Some of the smaller names, though, like Onto Innovation, to be fair, just full disclosure, top 10 trader, we had this a couple weeks ago, so it's popped. We advised some partial profits up here. But this is the type of action you do like to see overall, where it's kind of this, whatever it was, 6-7 week, kind of a double bottom base. And then as soon as the pressure comes off the market, it races higher, obviously reacted so far. It's up 10 points on earnings. I'll take that this morning. So we'll see how it goes. But ON2. So between Onto, some of the smaller ones, but AVGO or Broadcom and Nvidia. So chip stocks are definitely things I'm watching. Even if you don't buy them, I think it's just a key group to keep an eye on. But it's pretty, just going around. Aerospace stocks, I wrote about it in this week's Wealth Daily. Woodward was one of the names I mentioned. There's just a lot of companies that say, hey, over the next 3 years, we're going to grow, sales at 10, cash flow at 15, and something else at 25, that sort of EBITDA at 15 and free cash flow at 25% for the next 3 years. And the stocks are reacting. Obviously, this isn't some dynamic AI stock that's doing this over the last few months, but certainly kicking into gear. And if we do get some exhale in the market, some of these things that have shown, look at the volume pattern here. Not the thickest name, but 500,000 shares a day, but the volume characteristics look great. So if you do get a shakeout, my guess is it should be buyable, all else equal. I mentioned that financials look pretty good. This is KKR, and as a bull market stock, again, it reacted pretty well to earnings. It's had a lot of, you just see like it gapped up, reversed, then it kind of, been going up since then. Now it's back into resistance, but overall, weekly chart, big run, consolidating for a month or two, a couple months, I guess, sideways. A little bit of a shakeout last week on that volume. Now it's trying to resume higher. Apollo, which is kind of the same. It's a different thing, but it's the same, bull market type private equity name. This one focuses more on credit. Nice run, not as strong as KKR, sideways. And then Goldman Sachs, again, I know this isn't the sexiest thing, but financials are doing well. So this thing, had this endless tight area below 400. Broke out, retested, and now it's just kind of, kiting higher. Looks pretty good. Okay. Into some other tech. So this is Pure Storage. Now there's a bunch of earnings season for the most part right now is done, but later this month, early June, is a lot of the companies that have an odd fiscal year will report then. That includes Pure Storage. I like it just because I like the chart because it's just had a few of these moves on big volume reaction to earnings. Really hasn't done anything wrong. And now it is kind of, I don't want to say tightening up, but a very proper base. In fact, Market Surge lets you look at this. So it's, 17% deep at its worst correction here during this growth downturn. And now it's kind of perking up this week. We'll see. Again, there's resistance, yada, yada. It's got earnings in a couple of weeks here. But overall, pretty good pattern there. And then retail looks interesting. So Crocs, we shook ourselves out of it, I guess, in top 10 or whatever, got out about even, but then it did react well to earnings. You can see very light volume consolidation in here. Now it's reacted well to earnings, old resistance that it has to deal with again. But I do like this overall pattern, and it's had a nice, good size rest, and now, the volume's coming in there. And yes, it kind of reversed, but it's kind of held firm since then. SharkNinja, consumer products and stuff like that. Just a really nice uptrend, nothing much to say. A little bit extended here on the upside, but again, reacted well to earnings. Kind of steady Eddie play, not something that's overplayed and obvious like AI and chips, right? That seems to be what's doing well. Boot Barn, I like the story. It has earnings early next week, so May 14th. So that's Tuesday. What's interesting is they got look at the weekly chart. I guess it's been kind of trying to wear off these pandemic effects, but it has a great cookie cutter story, and it's been acting obviously better here the last 3 or 4 months. What was interesting this week is some short outfit, I forget which one, said something about them. I don't even know what they said, but the stock got hit at the open one day, and the institutions used it to gobble up the stock here 2 days in a row. We'll see what happens on earnings. That's probably going to count most, but I do like that overall setup. And then just, infrastructure. This is core in Maine. I think I've mentioned this before. Kind of wedgy here, meaning like kind of low volume, just kind of sneaking up on its old highs. It's got earnings early June, so not right around the corner. So it wouldn't surprise me if maybe it needs a little bit more of a shake, but just the overall pattern here. I like this was a big post-IPO breakout and just a huge run, and now just kind of a normal consolidation. So it could need more time, but looks pretty good. And then last but not least, I hesitate to mention this, but I keep an eye on it because I like the story. This is Samsara. It's a great long-term story in my opinion, and the fundamentals have been great. The valuation's also great in terms of very large. It's been one of these stocks that just it gaps on earnings, or it shows really interesting strength, and then it just fades. Even if the market's super strong or the market's weak, it fades. So, here's another example here. Here's another example. I wouldn't say it faded, but just kind of stalled out. Tried to get going again, didn't work. But it consistently has found support at the 200-day line or 40-week line. I do just find it interesting. I just feel like it's almost so obvious that it won't work near resistance, that I just feel like at some point maybe it will. It grows up and institutions pile in. So I do find it interesting. We've had this very, very sharp recovery here. Might shake out again. It does have earnings, I guess, in early June, so it's come, another month. But just something I'm keeping a distant eye on. At some point, Samsara, it's a $20 billion market cap. At some point you kind of feel like maybe the institutions really take a liking to it and they don't care about the valuation of the bull market. They'll drive it higher. So I'm just keeping a distant eye on it. Nothing that I'm, it's right straight up into resistance again here, but I think the next few days could be interesting. Okay. So back to the market. I mean, there's only so many ways I can say it. I'm encouraged. I like the snapback. At the same time, we've had a pretty good run here. A lot of the worries back here were forgotten. We're into resistance, and growth has been a little lagging. So, I think it's just really depends where you are. I certainly wouldn't be super negative on the market. I wouldn't not respect the action on the upside. So we did some buying this week and hopefully do some more buying next week. At the same time, make sure you're, watching good buy points and not just buying stuff because it's up a few days or you heard something good on TV. I think you got to be a little bit more discerning here, especially after the market's rallied here the last 2 or 3 weeks. But overall, good vibes. Let's see if they can continue going forward. Okay, that's all the time I have for today. Thanks for watching, and be sure to come by again next week for another Cabot Weekly Review.